Hi, I'm Dominic Picardo here for Spreadbet Magazine. Today I'm going to be taking a look at the price of copper. Now, the action in this key industrial input has been very negative this year. Right at the start of 2013, copper got up to around 365 cents or so, and following a little rally, has swooned alarmingly. And I say alarmingly because a lot of people watch copper for signs of things to come in the economy and the stock market. Big drops in the price of copper are held to spell trouble for the economic outlook and for equities, at least according to folk wisdom. The saying goes that copper has a PhD in economics because of these so-called predictive powers. My response that would be that copper probably does better than most economists at forecasting the outlook, but still gets it wrong more often than not. So, what do we know currently about the outlook? We know that China is suffering from slower than desired economic growth, and that's not good for the economy more generally, particularly the US and to the many countries with trade links in China. And China is a key consumer of copper. Its industry and construction trade guzzle huge amounts of the stuff. So, and right now the Chinese authorities are not stimulating the Chinese economy in the way that they have been in recent years. So this acts as a lid on the price of copper. At the same time, another worry for copper right now is the strength of the US dollar. And I read a note from Barclays Capital just this morning predicting further strength in the US dollar in the second half of this year. A rising dollar is generally bad for commodities and therefore for copper. And generally, rising dollar means falling commodity prices. So this is just another headwind for the red metal. I'm not mega bearish. I do expect China to begin to recover, perhaps in the latter half of 2013. And that's in contrast to the many people who are calling for the bubble to burst and for a horrendous meltdown in the Chinese economy. I also think that the dollar's recovery may turn out to be less impressive than a lot of people are currently bargaining for. But these are really stories for another day. Right now, I reckon there is a good chance that copper will continue this decline that we've seen in 2013 to date. The price is firmly below this 200-day simple moving average, and this is probably the most widely watched line for trend following traders and investors. So many people are watching it. So, and if we look at the latest action, which began from just above 300 cents, after this amazing one day gain here, the gains have been shallow and choppy, and these are the sort of characteristics of a counter trend move. A genuine uptrend tends to consist of more moves like this, and it tends to be steady with the mild pullbacks, which is very different from what we can see here. So what I would like to happen, or to fulfill my bearish prediction, I'd like to see copper form a downtrend or confirm its downtrend by breaking below these lows at the 322.40, and then what I'd do is I'd probably seek shorts every time the price sort of approached this line here, the 21-day exponential moving average. And you can see during the last downtrend how copper ran into troubles when it either approached this level or when it actually touched the level and then reversed. So a drop through here makes a logical shorting level. I think that these lows at 300 should probably give way if I'm right about the outlook, and we'll see a fall into the sort of 295, 285 zone. Looking beyond that, I think once the bear phase ends and maybe the copper price gets really beaten up on its longer term charts, I would be then looking for renewed upside. I don't think the commodities bull market that began in the early 2000s or so really has come to an end, and I do think as part of the next phase that copper will rise to above its all-time highs at 465 or so. But one trade at a time.